Hey, so good morning, everyone. Thank you for attending Stablecon. Very nice to see you all. So I wanted to introduce, I'm very lucky to be having a fireside chat here with Imran Ahmed, who's head of Stablecoins at Bitso Business, I believe. So we have a really interesting fireside chat coming up, I hope, which I think addresses real use cases. This is sort of the main thing. Why stablecoins matter in LatAm, real use cases, opportunities, the road to mass adoption. So without further ado, I wanted to introduce Imran, and I'll tell you a little bit about myself, and then we can go from there.
Absolutely. Well, thanks for having me.
No.
How do you want to do this? Should I give a quick intro on myself and then go from there?
Intro.
Awesome. So I have been at Bitso for almost a year and a half, and I run what's called Bitso Business. So if you look at Bitso, we're divided into two different categories. We are the leading and largest exchange in Latin America from a crypto side. And so we've got a massive retail presence with over 9 million consumers who use us from a retail exchange business. And then we have a second part of the company, which is classified as Bitso Business, which is our B2B side. Mm-hmm. And so what we've realized is we've built some amazing infrastructure. So we've got ramps, we've done a really good job from a regulatory standpoint, and the biggest thing I think has been liquidity that we've been able to build related to specific stablecoin pairs. And we've started to give those as an infrastructure to different companies. And so we've provided that infrastructure to over 2,000 businesses across the US, LatAm, Europe, anybody who wants to do business in LatAm. And what we've tried to do is establish ourselves as the player that people can leverage to get started, to enter LatAm, and to basically build that infrastructure that they need. And stablecoins have been a big part of that, right? So every single thing that we do, for the most part on Bitso Business, touches stablecoins. To the point where a month and a half ago, we actually launched the leading Mexican peso stablecoin called MXNB.
Fantastic. No, that's really good. And just by quick way of contrast, my name is Rami. I'm at Stablecoin Standard. We're a stablecoin industry body. We set up about 3 years ago, primarily to service non-dollar stablecoins who needed more attention in the early days of stablecoins. We're very pleased to say we've grown now to about 30 different members, including ecosystem partners, layer ones, layer twos, wallet providers, and so on. We're doing policy work and networking and just trying to educate the stablecoin industry globally and those that want to move into the stablecoin industry.
And an OG of stablecoins, which makes it 3 years old.
Yeah, exactly. Yeah, we measure OG in months, I think. That's all good. Very good. But no, that's fantastic. You set the scene extremely well. So I had a couple of questions here. With regards to sort of Mexico received a record $64 billion of remittances in 2024, and 96 of that is coming from the US. That's about 3% of the entire GDP of Mexico flowing through this corridor. So how did that inform your decision to launch MXNB? What are you trying to solve there? What are the inefficiencies that bringing a stablecoin corridor can do to improve that?
Yeah, absolutely. So I think it's important to sort of start out with, 64 billion of remittance volume, as you mentioned, of which over 10% of that actually goes through Bitso and touches our rails. And so, as a business, we've obviously seen companies, very traditional players, call us effectively and say, hey, we're looking for alternative ways to get the money down to Mexico. And stablecoins have been the route of choice, and I think they're only increasing from a preference standpoint. The big, beautiful tax bill that Trump, I didn't call it big and beautiful, I think Trump called it big and beautiful, but that Trump recently announced actually includes today, 3.5% tax on remittances that has not historically been there. Initially it was 5%. I think the House peeled it back to 3.5%. We'll see if it passes the Senate and that stays with the game. But what was really interesting is in our reading of that today is that crypto and stablecoins are actually not included from that corridor standpoint. So if that does take off, then that could be a very massive opportunity, and that could be very interesting. But to address your question very directly on the MXNB side, what we've been seeing is that corridor from a remittance standpoint become more and more popular. And MXNB is a way for us to enable companies to enter Mexico more aggressively without some of the licensing requirements that you would have. Like, for example, you can't hold MXN if you don't have a Mexican entity. You can hold MXNB. And those are the types of things that we facilitate and that we enable.
Wonderful. No, that's really, really interesting. And then I guess just talk me through the logistics then of a particular, of accessing that corridor and replicating that money flow using stablecoins. That would be, is this the typical stablecoin sandwich? Someone funds in dollars?
Typical stablecoin sandwich, exactly. I think, what we have seen most popular is, let's take a typical remittance company. So FedEx Pago or one of these companies that are employing the stablecoin sandwich. People deposit the USD into Felix Pago's account. There's some conversion of USD to USDC or USDT, mostly USDC in this case. And then that USDC is transferred to a Bitso wallet. That Bitso wallet then there's a conversion that happens in that game. And so if you look at what Bitso sort of espouses that we do, there's three things. It's pay-ins, payouts, and then FX.
Yep.
And so the FX element is what we handle. And then we can keep that money in MXNB if we wanted to, or we can just go to fiat. And I think the future from a stablecoin standpoint is people who can kind of blur the line between fiat and stablecoins. And that's what we're really trying to do. So, with MXNB, the idea here is that people don't really distinguish between MXN and MXNB. Similarly, we think, exchanges like Coinbase are doing a great job of basically not distinguishing between USDC and USD. Yeah. And when you blur that line, it becomes a heck of a lot more useful.
Yeah, absolutely agree. I've often thought that stablecoins are not a replacement, they're a complement to the system and should be interchangeable. So, the more people think of it as just dollars or Mexican peso and let the provider choose the appropriate rail for the use case, that's the way to really get it.
And the sooner you can do the one-to-one conversion,
yeah,
that's what makes it beneficial, I think.
Yeah. So a question then, you set up your own stablecoin launched. What was the logic and the rationale behind doing that rather than using some of the existing stablecoins? Because there are existing Mexican peso stablecoins out there. What was the rationale behind doing your own?
There are a couple. I will say that they haven't really taken off, and I think we have a phenomenal sort of brand position in Mexico. As I mentioned, we have 9 million retail users, and we've got a pretty good trust factor from a regulated entity. For example, we're one of the few, and I think the only crypto player that's directly integrated to the Mexican real-time payments, which is SPAY. And so that gives us a nice advantage. And like from a positioning standpoint, we've actually, we think that there's a lot of runway for us here. And to date, it's been early innings, but we've launched on Arbitrum and on AVAX, and you're already seeing the TPVs, skyrocket month over month. So it's been pretty nice to see.
No, that's fantastic. And then the question, actually, you hit upon it, which is this integration into SPAY. So alluding to our earlier point around this interchangeability between digital and analog, how critical do you see that in terms of the unlock for adoption for MXNB and Bitso's growth generally? Yeah.
I mean, for MXNB, there's multiple use cases that we can sort of define around it, but I think the integration to SPAY and sort of the direct connectivity to SPAY allows people like remittance companies or other companies that want to do business in Mexico to have a direct endpoint to the bank account. So instead of using two vendors, someone for the liquidity and for the FX, and then going to a separate vendor for the pay-ins, payouts component, you can, through one integration with our API, get access to both and have that be pretty seamless. And the biggest thing has been, for us at least, really making sure that we can be the most competitive on both sides of that equation.
Yeah.
And so, liquidity tends to be the biggest.
It's the key.
The biggest key, as you know, in all of these corridors. And for us as Bitso, we've really spent a ton of time and energy building that liquidity out to the point where, like, if you look at, spot rates on weekends, for example, it actually maps to Bitso. So,
nice. Okay.
because we've been that channel, and you've got remittance companies sending money on Friday nights throughout the weekend, and so the channel that they have to use from a spot rate standpoint tends to be us.
Fantastic. No, that's real, and that's almost validation that you're the market at that point. And
Yes.
the trade flow, the business, and generally the adoption follows the quality of the liquidity provision. So if it's in one
100%.
place, that makes perfect sense. No, that's great. So the other question I wanted to ask, regional opportunities and challenges. As you mentioned, you're 10% of a lot of the flows that are happening in the region. How big do you think the opportunity is for peso-backed stablecoins across Latin America, not just Mexico? So taking a more sort of holistic view.
So look, we've launched MXNB, and that's what I've highlighted on stage today. But we've also launched a Brazilian stablecoin called BRL1 with a consortium.
Nice.
That has been very interesting, still in early innings, but we think there's opportunity. And I think there is just this regional stablecoin play that is going to occur globally because people are seeing use cases through stablecoins that are interesting. I think when you look at LatAm in particular, there are a couple of interesting trends that I can see, and let's call it a microcosm of what we think is happening in the world. One is each country has very, very different legislation and rules related to stablecoin adoption, and navigating that has been challenging, to say the least. So for example, I think last week in Brazil, they raised what they call the IOF tax, and that's the tax that you have when you send money out of the country. They raised that to 350 basis points. It used to be, I believe, in the realm of 60 to 85 basis points. And so with that increase, you're seeing people say, how do I avoid this? How do I avoid this? And I think what's really interesting in LatAm is you've had enough destabilization from countries' standpoint where each country is thinking about, or each country has a unique sort of element. So I'll give you another example. In Argentina, I have a decent chunk of our employees based in Argentina, in Bitso, and it is the first time where employees come to me and say, Imran, I'd like to be paid in stablecoin.
In dollar.
I'd like to be paid in USDC. And so we've made a policy that 15% of your salary in Argentina can be paid through USDC because that's the demand and it offers more stability than the Argentinian peso. And so every country has a little bit of a different flavor and different adoption curves. And what we're seeing in LatAm is people are more inclined to use stablecoins as a result of that.
Yeah, no, I think you hit upon a really important point that I wanted to actually drill down, so I'm glad you started this. LatAm seems to be a region where they have adopted digital currencies as a result, generally, historically, of lack of trust in government, lack of trust in their currency, instabilities, but it's one broad brush approach to LatAm. There are nuances on a country-by-country basis, and you drill down into Argentina effectively being, the use case there is more an inflation hedge rather than remittance corridors and so on. Mexico's remittance corridor. Brazil is mainly, where do you think that the adoption curve lies for stablecoin usage within Brazil, for example? Are you able to give us a bit of a broad overview of the country by countries there?
Yeah, absolutely. So I'd say Brazil, from an order of magnitude standpoint, is still in early innings from a stablecoin adoption standpoint. There's a lot of activity and people exploring opportunities on the import and export side. I don't think anyone's cracked that nut. And so the reason for this, and this is why I think the blurring of the lines between stablecoins and fiat is so important, is because being just a stablecoin player in the ecosystem, I don't think is enough.
Yeah.
You kind of have to be able to provide a suite of products around what you're offering. So for example, if you're doing business in Brazil, and you're trying to serve importers or exporters, one of the things you need to figure out is how do you build an ecosystem of credit around what you're offering from a stablecoin. So the stablecoin becomes a tool in the toolkit, but at the end of the day, people are still looking for a credit facility. And so you have to bundle those two things together to say, you get the speed advantages of working with stablecoins, you get the potentially, hopefully, the liquidity advantages of working with stablecoins, and then you move forward from there to say, I'm going to offer credit solutions to you.
Yeah.
So it becomes a building block on which to build your business.
And then I think that segues nicely into the next section I had, which was with regards to the programmability of money. I mean, we're at the beginning of this journey with stablecoins, and you issued on Arbitrum and AVAX, and part of the beauty of, at least for me when I came into stablecoins, was the programmability aspect of money. So as it pertains to things like supply chain finance and this kind of stuff, for B2B businesses, I think that's really where we're going to see incredible growth. But I think it's, to your point, you need companies like Bitso that have all of the elements. It's not just enough to have the stablecoin. You must have the liquidity. You must have the link to the real-time payment rails in channel, in country. You must actually have a decent B2B interface as well, I think.
Absolutely.
So it's blending together all of these elements, I guess.
Yeah, and it's really interesting because what we've seen is it's almost a flight to become closer to a JP Morgan trading, as opposed to what you could classify as like a traditional tech company. You're building a trading desk, you've got a liquidity team that's working from all channels that way. And then at the end of the day, from an interface that businesses are requiring, they want to do FX, and that's the use case that's in LatAm. And if you can't provide FX tooling that is high scale, high grade, designed for large entities, then you're not going to get those large entities on the platform. And so what we've seen is the small and mid-sized businesses we can get. Actually, like they're less, ingrained, I would say, in their traditional call my FX trader who I have on speed dial and say, I need to do whatever. It's these big players that we need to kind of be thinking about, and how do we tap into the network that the Goldman Sachs and the JPMs have historically done.
Yeah, that makes sense. And sort of in my history, I was at Citibank back in my career on the FX desk, and as I sort of left that to move to the digital space, we were starting to get market makers that, Citi and other franchises were starting to price people on Saturday, and we think this is an amazing innovations, but obviously that needs to continue. And as stablecoins become more relevant, harmonizing that liquidity between on-chain and off-chain is super important. So yeah, no, it makes perfect sense. From a technical perspective, so when you launched on Arbitrum and you launched on, and AVAX you mentioned as well, was there a particular choice? What was the methodology as to why you chose those particular entities?
So there were a bunch of reasons. They've been great partners, both of them. I think our approach, though, as Bitso, is that this is not a single chain world, and people aren't going to operate on a single chain sort of environment. And so we've taken kind of a three-legged approach. So, for example, on our treasury side, we're very ingrained with CCTP and all the things that Circle provides that allow that chain interoperability, if you want to call it that, or cross-chain sort of functionality. On the issuance side, with MXNB, for example, one of the things that we've done recently is layer 0 and being able to go across chain, because we don't think that the chains in of itself are the competitive advantage. And you want to give an opportunity to anyone to be able to move between chains pretty openly. And so that's been a big component for us. And then we've also launched a self-custody, I'll call it the Web3 version of Bitso.
Okay.
We call Bitso on chain, and in that sort of process, we're using Li-Fi and others to help in that cross-chain sort of workflow. So we're taking a very comprehensive look to say, okay, we need to work across chains. We can't be single-threaded from that standpoint.
And I think it speaks nicely to the title. The road to mass adoption is really built on multi-chain, and I think
Absolutely.
particularly in Web 2 companies coming to this, they don't actually probably know the difference between all of the different blockchains and so on. You just need to present them with the product that they want. Whereas I think people from Web 3 have their ecosystems that they operate in, certainly on crypto land and Web 3 companies. But you're right. You need to make sure interoperability as it pertains to harmonizing the liquidity, I think is extremely important. So I'm glad that you're sort of taking that multi-chain approach.
Yeah, and I think the other thing that comes to mind as you bring that up is within the USD basket, everyone's talking about USDC, USDT, there's USDG, there's Pi USD, there's so many of these USD stables. And the problem that occurs when you have all these different USD stables is that you have to create liquidity pools against each USD stable.
Yep.
So the alternative that I think will start to gain more adoption, and it depends on Circle's IPO and all those other things coming up soon. But I think the alternative is these USD basket type approaches where people say, we need to create a single liquidity pool against one single USD basket in order to have this be functional. And it's a very, very hard thing to accomplish. And so those are the types of things that are challenges in the market right now that will be, I think they'll be solved pretty quickly, but we'll see how that turns out.
Yeah, I think we've got the right minds in the room now looking at these problems. I believe that we'll have a good approach there. And I think from the regulatory perspective, whether it's in the US or whether it's in LatAm, there's now progress, like meaningful progress towards actually accommodating stablecoins in the financial services landscape rather than it being an adjacent. Sort of how can we integrate things? So I think that's moving in the right direction.
3 years in, it finally happened.
Yeah, exactly. Well, what's your 5-year vision then? If we're going to look further out, we're 3 years in, it was difficult. Yeah. Now we're getting somewhere. Where do you think we'll be in 2030? What would be for Bitso and for stablecoin adoption in LatAm and the region?
Yeah, I think people will solve the nut between, and to me again, as I mentioned, it's all liquidity. And you will see more people source liquidity from TradFi.
Yeah.
And so what we're gradually coming to, and you're seeing this in LatAm where there's individual liquidity providers who are basically going to the large banks and using that as the opportunity to provide liquidity to the stablecoin sort of players. And I think what's going to happen is you're going to see that compress. And so pricing will start to look very, very similar. And then when pricing looks similar, because today pricing's not as good, but when pricing looks similar, there's no question that stablecoins are the better way to send money, better than Swift, better than any other tools out there. And so when that happens, you will see just mass adoption, and all the banks will come in, and it will be the play. And the big thing is, I always think of it like if you are a Pemex or if you're a large institutional like oil company, and you start to think about stable coins from a trading standpoint, that's when we've won. Yeah. And that's when you've tapped into the broader ecosystem. And I do think within a 5-year time period that is going to happen. And you're going to see stablecoin folks get integrated into Bloomberg terminals and things like that traditional FX players are more used to. And we're going to become part of that traditional fabric as opposed to the rebels on the sideline who are throwing stones at Goliath.
Yeah, very much so. No, that's a great answer, and yeah, I really hope that we go down that route, and I hope that that the TradFi participants and operators collaborate rather than try and kill what's the innovation that's happening in the space. Because as you say, liquidity is coming from everywhere. The banks hold most of the liquidity corridors.
Absolutely.
So working to play nicely and get along for the benefit of everyone, I think is actually going to be very important. But it needs grown-up participants on the Web3 side like Bitso to start to build those bridges. Yeah.
Absolutely, yeah. And I think, this conference is a testament to that being something that can be doable. If you had this conference 2 years ago, I think you would have had maybe 100 people in the stablecoin space. And today it seems like every other day there's a new company launching with $25 million of seed capital. So
Indeed. Yeah, absolutely. Well, look, we've just reached time, so I wanted to thank you for a very enlightening chat. I really enjoyed it. And if you want to find out more about Bitso, then of course come and meet up with Imran. If you want to find out more about Stablecoin Standard and the work we're doing to try and build those bridges, then please hit me up. Thank you very much for your time.
thanks.
Hey, really good.